So, in general, these steps must be followed to calculate the net present value. Step 1, figure out which cash flows are relevant and which cash flows are not relevant. Step 2, only use the relevant cash flows to calculate the so-called project cash flow for each year. From Chapter 2, project cash flow is also known as free cash flow. Okay, so in other words, 1 year at a time, starting year 0, all the way through the final year of our project. You need to put together all relevant cash flows for that year and sum them up as the project cash flow for that year. Once you're done with that part, and that's what this entire chapter is all about. How do we do this? Step number 2, right? So step number 2 is like the essence of Chapter 10. Once we find that number for each year, then we can calculate the net present value by discounting all future project cash flows by the right number of years and then subtracting project's cash flow in year 0. When we find the net present value in dollars, we would then be able to evaluate this project. The project should be accepted if the net present value is above $0. Otherwise, if it's below $0, then we would say that the project should be rejected. So, how should we calculate project cash flows for each year? In general, to calculate project cash flow in year 0, project cash flow in year 1, project cash flow in year 2, and so on, we need to use this general formula. To find project cash flow, we need to sum up 3 things: project operating cash flow, OCF, project net capital spending, NCS, and project change in net working capital, change in NWC. So essentially, what this all means is that 1 year at a time, we calculate the operating cash flow, the net capital spending, the change in net working capital. Then, once we get these 3 numbers, we add them together, and that's the project cash flow for that specific year. And then we repeat the whole thing for each year of the project. Before we start looking at how do we calculate the operating cash flow, the net capital spending, the change in net working capital, let's look at the general idea behind each. Essentially, think of there being several relevant cash flows that, by their nature, the cash flows, what they have in common, so they have something in common, right? And that puts them in the category that we call operating cash flow. Other cash flows have something else that they all have in common. And they have nothing to do with operating cash flow, but instead they have to do with what we call net capital spending. And everything else would belong in the 3rd category of cash flows, which we call change in net working capital. So what is in the 1st category? What do we put together to find the operating cash flow? Essentially, it's everything that allows us to calculate the cash flow from sales that the project would generate every single year in the future. This is nothing but profit for the year. Profit after all expenses have been subtracted from the sales revenue, right? So operating cash flow is the same exact thing as profit. And this is something we need to calculate for each year of the project in the future, starting year 1. So you may think that, isn't that what the project is all about? It's just, calculating profits from whatever it is that we would be selling. Well, I would say yes, it is kind of the main thing, but there might be other things that the project would involve. So let's see what's the idea behind net capital spending. There are several different cash flows that belong in this category. The general idea is it's something that has to do with the long-term investment. So something you're going to be using for a very long term, such as a building, a few items of some equipment, some machinery, maybe laptops, maybe delivery trucks, whatever those fixed assets are. And typically, net capital spending is something that we need to worry about for the very beginning of the project, when we buy those buildings, equipment, trucks, laptops, etc., and the final year of the project, when we would be selling all of those used. Of course, there might be things going on in the years in between, such as maybe if we bought a building, after a few years we would need to maybe build some addition to the building, expand it, right? Add more square footage. So that would be an extra net capital spending sometime in the middle of the project's life. But in this chapter, the only cases that we will be looking at are the ones where we buy something in year zero. That's essentially what we call the initial investment. And when we sell that used in the final year of our project, right? There are a couple other things that belong in this category, such as opportunity cost, but like I already mentioned earlier, we are not going to be looking at something so complicated, like some alternative investment and how much you could have made there, how much you could have spent there. And then the third, so there might be other relevant cash flows which don't belong neither in the operating cash flow category, which has to do with like how we identify like how much profit we made for each year, nor in the net capital spending category, which has to do with buying something bulky, something large, big, expensive, like a building, equipment. Net working capital, you can think of it as small things that we may need to use for the project, like short-term investment related cash flows, such as maybe we need to set aside a few $100s in cash, so we can always have it lying around, always there, always handy, that we can take the money out whenever something needs to be quickly repaired, right? Cash is technically not the only item that belongs to what we call net working capital. There are other items like inventory, accounts payable, accounts receivable that are also in this category. Okay, before we do a couple of big net present value problems in which all of this new information will be put together, let's first look in more detail at the operating cash flow type, cash flows. So cash flows that belong in this category. And what is the formula to find the operating cash flow, right? Then we will look at net capital spending, what's included, what's the formula we use there, how do we calculate the net capital spending. And then finally, what is meant by change in net working capital. So we will have a few examples for each of these parts of the slides.